markets morning. There are plenty of really interesting setups as we get ready for this most important of Fed meetings. And I've probably said that for most Fed meetings and many Friday nights over the course of 2018, such has been the nature of trade, of markets, of geopolitics this year. But my sense is that this is really a big one. Last night we had US 10s up at 311. They closed or at now currently 3.098%. They're ready for a breakout. If you look at them in T-note terms, so in price terms, they're ready to bust completely much lower. So that would mean rates going higher. Or they're ready for support. We've got some similar outlooks with other assets as well. So this Fed meeting is going to be really important. My sense is some of the doves have shifted. My sense is that means that the dot plot will look more aggressive. My sense is that Jerome Powell will work around the terms gradual and those kind of words so as not to spook the market, but that the Fed is likely to be slightly more hawkish than the market is currently expecting. I'm reading a lot that it's going to be ho-hum, nothing to see here, move along please. I just don't buy that. I think there will be some market impact from this. My bet is that the doves have moved towards the hawks. They're not full-on hawks, but that the Fed will wax a little bit stronger on the US economy, on the outlook for jobs, on the outlook for inflation, and thus on the need to move rates a little bit higher than perhaps we thought just 6 weeks or so ago. Anyway, whilst bond traders are looking at that, it seems that stock traders are taking a little bit of a look too. Of course, we've got the new record highs from the S&P and the Dow last week. Remember, the Nasdaq didn't participate, and we've seen those two bigger indexes, or better known, I guess, flatten this last couple of days, waiting for the Fed. The Nasdaq's rallied a little bit, but nothing too much. The S&P 500's at 2915, the Nasdaq at 7653. Better times in Europe, flat in Australia. We're waiting for some direction, so we'll see what happens. In terms of currency markets, US dollar was on the front foot. In Asia yesterday, we had the euro lower, we had sterling lower, we had the Aussie lower, but it reversed. Euro recovered. That was despite Peter Pratt, who's the chief economist for the ECB, basically saying that the bearish interpretation, or the hawkish interpretation, I should say, of what Mario Draghi said the night before was off the mark. But if you think about what we've seen in the last 24 hours or 48 hours, we have heard from the ECB that they need to raise rates. We have heard from the Bank of England that it thinks it can raise, or it can unwind QE without hurting the economy. We have heard from Governor Kuroda that he would like to get out of this unconventional monetary policy because it's time to think about the impacts of too low rates and those kind of things. So we know that, like the Fed, these other central banks are moving towards normalization, if I could call it that. Doesn't mean jacking rates up or anything like that, but normalization. That's the key risk from a dovish Fed tonight. That's the key risk that could see the US dollar get absolutely belted. So it could be a really interesting time. Anyway, 3 minutes is far too long for an intro, so let's just dive in. I want to start with oil. Oil was an interesting one last night. So what do we got? This is Brent. We had Brent run up. Donald Trump was talking at the UN. He popped Iran, he popped everything. Have a look at my markets morning report. I've had a big discussion and put a lot of real estate there about the Trump doctrine that emerged from both his comments and Lighthizer comments. It's clear they are going to persecute both Iran and their own agenda. And to that extent, oil continued to rally. But then I think it was Goldman Sachs, but one of the investment banks put out a report saying that even Iran can't support prices out up here at 82. And Bloomberg had an interview yesterday with the Asian boss of BP, who said that everyone's focused, and that's because everyone trades the front month, don't they? Not everyone, but you know, oil tourists, if I could put it that way, and I don't trade the back end. It's not like I'm intricately, but oil tourists trade the front one or the front two contracts, and then you've got a whole oil curve that no one looks at. And what this head of BP, also in my markets morning report, said was that everyone's focused on the reduction in supply, but she's worried about demand and what comes from the trade war, which is why I talked about the Trump doctrine before. It looks like this could be protracted. If that's the case, then the effects will show up in the economy later on. That's going to impact oil. So what do we get? We got a bit of a rebound. The red bar there, which is today's trade, was a result of the 2.9 build in API that folks didn't expect. It would be natural for a retest after this break to come back to 79.69. It may even come back to this trend line. If the trend line breaks, then this has been a false break. That candle, anyway, signals chance for further weakness. EIA data, see that's rolled over on the 4 hours. EIA data tonight in the US is clearly going to be very important. What do we got here? This is WTI. You can see a down day. The API data came out at 6:30 and then off a little bit again. My sense is another retest of 71.20, 71.50, and then we'll see prices in a 4 hour basis went a little bit vertical after last week. So keep an eye on those folks. Back to foreign exchange now, and clear parameters for the euro. So I've set this up, talked about it in Markets Mornings, the written version. Set this up so you can see the parameters. The parameters are 1850, 118.50 on the top side, and 116.75 on the downside. If you get either of those two give way after the FOMC, that will be a signal for a deeper move. Now, the issue with the FOMC, trading the FOMC, if I could editorialize for a sec, and this is not advice, it's just, and remember, this is just my setups and what I'm thinking. It's not advice to you to do anything. What you often get, you get the statement. So everyone looks at the headlines on their Reuters or their Bloomberg or their Twitter. They react to that. Then they read the note. They should at least. And then that might temper their judgment. Then we wait a little bit, about half an hour, and Jerome Powell comes, gives his press conference, rereads a statement, and then takes questions. So you can have substantial volatility in those kind of 3 periods over the course of an hour, or at least 45 minutes. So you've got to be careful about getting head faked. So, but as I say, these are the levels to watch. In terms of dollar yen, it's up near, that's dollar CAD, beg your pardon. It's up near the previous highs. You can see that. So this is setting up as a potential massive run towards 117 or 118, as I think that's 4 hours, beg your pardon, as I think I highlighted yesterday. You can see here, so 116's there. So 116.40 would be your target if 113 breaks. Now you can see there's this blue zone, which is these tops over here, but it's fair to say now conclusively that the 3-year downtrend, and we'd have to have an equity market crash to change this, or Governor Kuroda to actually raise rates or do something with QQE. The key here, if I may, is that we now have conclusive proof because we've got a break, come back, break, come back, break, come back, break, come back, break, come back. Now we're having a run. If we can get up through 113.13, my target would be the top of this blue zone, right? Which is, if I can find it, I think there, about 114.30. So that gives you about 120 points. If that gives way, then we're on our way to the 138.2%, which is 116.40. This is the classic setup for me. We've had a move, we've come back, we've retested, and now we're running away. We haven't broken it yet, so it's not a fait accompli. Trading never is it? But that's the setup. What I would say, and a lot of these setups bother the heck out of me because of what they suggest the FOMC might do, which is wax dovish, is that that's a pretty vertical move, all things considered. And it wouldn't take much to break. So certainly if it took out 112.5, which is only 50 points, that would suggest a run lower in the short term. Sterling, it rallied last night. So back to the old resistance zone. So that was about, that was one of those classic moves, up, down, break, run. So what do we got? We got 130.50 as support now. It needs to get down through 130.50 to get bearish. Otherwise, the run back towards 132.5, maybe even 133 is intact. My sense, though, is that sterling remains a dangerous currency to trade. Lots of headlines, lots and lots of headlines. So on that basis, my sense of trading sterling is probably a quarter of the normal size, if I could put it that way. Here's the battler, Aussie, right? So that's where our downtrend originates. We've had 1 test, we've had 2 tests, we've had 3 tests, we've had 4 tests. 4 tests, 4 failures so far. As it stands, if it can get up and through 73, sort of 10, 30, it could run. It could run 2.5 cents. So that's the level to watch tonight. I've been saying 72.20 and 72 are the key. As long as it holds above that, it's moving into a sideways range. But it's unlikely to just stick after the FOMC. Jerome Powell does not want to disrupt markets. Central bankers do not want to disrupt markets. But if it breaks down through 72, it becomes a shot duck again. Down towards 70.85, maybe even a little bit lower. If it gets up through 73, 10, 30, it can run. So they're the parameters for that one. There are no domestic catalysts of note at the moment. Dollar CAD, so not moving with oil, but what you've got here, I'm sorry about the orange, I'll get rid of that for tomorrow. Test. So we've got a broad range. I might get rid of that downtrend because it seems superfluous. Right. So you could probably call it a Davis box between 132 and 128.80. So that's our range. If 128.80 breaks and you've got to run to 126.90, that will depend on what the FOMC does. See, there's so many levels so close. Something to watch. There's a very, very short-term downtrend here, and I'm hoping this isn't orange. It is, though. Right, so let me just make sure. Sorry to lean in. Looking at my nostrils, hopefully not. There we go. 129.55. So we're right on the cusp of a small break, but you needed to get through 130 to get too excited about dollar CAD moving higher. The Kiwis had a bit of a rough morning. The trade balance came in 1.4, 1.5 negative deficit as opposed to 900 and something, but it's recovered. It was down a little while ago. You can't see it there. You might be able to see it on the 4 hours. You can see it on the 4 hours. But overall in a 4-hour downtrend, potential to come back and retest this trend line, 65.96. If it broke below that, then I'd be looking for lower. We've got the RBNZ this week. Looking at gold, going nowhere, but some parameters. We've been going in a wedge. I still think 12.16, 12.17 is the level that it has to get through in order to run to 12.40, and then at 12.40 it's going to struggle again. But these are the little parameters you've got here. If it was to fall down through 12.93.94 and then down to 12.80, if it holds 12.80, 12.82, it looks okay. But that's a nice little wedge that's working, and if you move it into the 4 hours, you can see the ratcheting there and a nice little uptrend there with a nice little flat top. So a wedge within a wedge on a 4-hour basis for those who like to play gold from that side. Copper was under pressure and then bounced. A really nice recovery from copper last night. I'm not sure it tells me anything about the overall price action. It still looks too steep, but we now clearly have levels to trade off. So 286.5, remembering that was the previous range top. 286.5 on the top side, and last night's low, beg your pardon, if I can find it, there we go, at 278.80. So that's pretty broad range, 8 cents in a day, or in a couple of days, pretty good. So they're the parameters that I'm watching in copper. Business Insider just had an article literally published in the last half hour about Macquarie Bank liking copper amongst some other metals. So, copper and Aussie are both tied to expectations about growth. So, in the same way that the lady from BHP in talking about oil was effectively saying we're all too short term, so you've got this divergence between where the global economy could go in terms of growth for China, for the world, for demand and all those kind of things, and where we are now, which is a release of tensions, largely because the Chinese haven't hit back that hard. So they haven't goaded President Trump into doing anything silly. So that's important anyway. Just quickly then, we've done the other commodities. I'll look at stocks, S&P. Jimmy R still pointing up, drifting here. So you could an aggressive trader could take a short-term short with price with a stop above last week's high. That would be potentially the kind of thing, pardon me, that I might look at, or you could, not advice again. And I'm not trying to give advice. I'm just, the point of these is to give you setups and catalysts for thought. That's what I'm trying to do. Catalyst for thought. 28.97. If that broke, then pardon me. Don't forget this ledge here. Then that might be the run lower. But don't forget the Jimmy R points higher. The Aussie market's a bit more interesting, a bit like euro or gold. 6225 on the top side, 6145 on the bottom side. You can't really see that, so I'll blow it up for you. They're the parameters. Break either side. Otherwise, you dig into the 4-hour range, and you can see it playing around in the same way that gold has been. Now, the DAX was up last night, unlike the S&P. And resistance from that trend line is now 12,458. I misspoke yesterday. I don't know what I was talking about. I meant 12,515, and I think I said 12,115 or something like that. Anyway, it was 12,515 last Saturday when I did the data. It's 12,458 now. So that's a level to watch if it can get through there. But look at this stochastic. The MACD, they're still closing, which means that the momentum is still there. We haven't seen the crossover yet because it hasn't gone positive, so the trend, medium term, hasn't turned positive yet, but and that makes sense given we've got this overhead resistance, I guess. So, but keep an eye on that. Last but not least, Bitcoin and Ripple and the crypto space has been a lot of fun recently. Ripple went on a tear, and what you've got here is the best way to look at Bitcoin at the moment is to just draw trend lines for it. And what you've really got is if that's a head, these are shoulders, but overall you've got a range. And I'm going to move this trend line because on my Saturday morning stuff, which does tend to take a move into Saturday afternoon, much to the chagrin of Mrs. McKenna, because it takes about 6 hours to do my scan of 30 markets or so. So you've got that, and then you've got another one that came down to where we were the other day, about 6,700. So we've got to get up and through 6,700 for Bitcoin to run on. But that's enough. 17 minutes, way too long. I apologise. Fed tonight. Nothing else is out. The Kiwi data's out, and there's nothing else of import until we get that Fed meeting. So I'll be up at 3:30 my time, getting ready for the Fed. So there'll be lots to talk about tomorrow. I will share a link to subscribe to this on Twitter, and then you can get it direct from me in case you miss my tweet, given how many tweets go past. Anyway, this is great. I really want to thank people. We had about 120 views yesterday, which from a standing start for me is fantastic. 400 to 500 used to be my normal number at AxiTrader, so I'm hoping to be able to get there. And I'm hoping also that at some point this will be part of a product offering, because I'd like to be able to keep doing this for as long as possible, perhaps into my 80s. Anyway, have a great day. Bye for now. Go the Fed.